Welcome to Talk Tickers. Today, we are unpacking a real head-scratcher from American Tower's third-quarter earnings. The company put up some fantastic numbers, but the stock, well, it took a nosedive. We're going to dig into what happened and, more importantly, why.
Okay, let's just dive right into this because this is a classic Wall Street puzzle. On one side, you have a stellar earnings report, a clean beat, and they even raise their guidance. But on the other side, the stock gets hammered, dropping almost 4%. So what is really going on here?
All right, so before we solve the puzzle, let's just establish the facts from the report itself. And on the surface, things looked really good. This was a fundamentally strong quarter.
First up, the key metric for a company like American Tower, adjusted funds from operations, or AFFO. They delivered $2.78 per share. Now, Wall Street was expecting something closer to $2.65, so a very solid beat right out of the gate.
The top line looked just as good. Revenue came in at over $2.7 billion, which is almost an 8% jump from this time last year. You know, that tells you the demand for their cell towers and data centers is absolutely humming along.
And here is where you can really see management's confidence. They didn't just meet expectations for the quarter, they raised their outlook for the entire year. Every single key metric got a boost. They mentioned some helpful currency tailwinds, but the main reason they gave was durable, ongoing demand. That's a huge vote of confidence.
And now, we get to the disconnect. Management was on the earnings call painting this incredibly bullish picture for the future. But the market? Well, the market just wasn't dying it that day.
A massive piece of their optimistic story was their data center business. The CEO, Steve Vandran, was really talking up record leasing, and he pointed directly at all the new demand coming from AI. Machine learning, GPU services, the whole shebang. This is the growth story they want investors to latch onto.
And yet, this was the result. After the strong numbers, the raised guidance, that compelling AI narrative, the stock closed down 3.7%. And this was on heavy volume too, so it wasn't a small move. The sellers just completely overwhelmed the buyers.
Which brings us to the million-dollar question for anyone looking at this stock right now. What happened? Was there something we missed hidden in the report, or is there something bigger at play here?
Now, to get the answer, you really have to zoom out and look at the context. This wasn't just a one-day thing. Over the last month, AMT has seriously underperformed the rest of the real estate sector. We're talking down almost 7%, while the broader REIT index was basically flat.
And there's your culprit. It seems this sell-off wasn't really about American Tower's performance at all. It was about the market's fear of rising interest rates. You see, REITs borrow a lot of money to buy property. So when rates go up, their costs go up, and that spooks investors. It looks like that broad negative feeling just completely overshadowed all the great news from the company.
Okay, so with all that context in place, let's look ahead. It's time for the next call, our take on what's next for American Tower.
We're going to break our analysis down into 3 simple parts for you. Our outlook for the fourth quarter, our thesis on where the stock price is headed, and finally, our official rating on the stock.
For Q4, we're cautiously optimistic. We think the business itself is going to stay strong, and organic growth in the tower business should be stable, and those AI tailwinds in the data center side are going to keep blowing. But the one thing to keep an eye on is leverage. The CFO hinted that leverage might tick back up toward that 5.0x level, and in this environment, that could make the market a little nervous.
So that leads to our price thesis. Honestly, we think the stock is going to be a battleground. You've got this tug of war between the company's strong execution on one side, driven by 5G and AI, and those big macro headwinds from interest rates on the other. In the short term, that means volatility. But long term, we think strong fundamentals usually win out, and that gap between the company's actual performance and its stock price, well, we expect that to tighten.
And based on all of that, we are giving American Tower an outperform rating. The thesis here is pretty straightforward. We believe the market is punishing a best-in-class operator for fears about the whole sector. To us, that seems like a compelling opportunity for long-term investors.
So we'll leave you with this final thought to chew on. Is the market's fear creating a golden opportunity here? Is this a chance to get into one of the most durable growth stories in digital infrastructure while everyone else is looking the other way?
This is not financial advice.